Hello and welcome back. Happy Tuesday to everyone. Before I get into statistics from across the country, everywhere but the East Coast, I want to talk about those new mortgage rules and the 30-year amortizations and whatnot, because I've had time to digest them and done a bunch of reading, and I'm sure you have too, and heard a bunch of other people comment on them. So I kind of want to refresh our memories and kind of drill down to exactly what is happening here and pretty much how the government and their policies are playing politics with our future and with our housing. So if you remember earlier in the year when Trudeau came out in a press conference or in an interview, I think it was in BC, he said housing needs to retain its value. It's a huge part of people's potential for retirement and future nest egg. And of course, that raises the question, as in this article, did Trudeau admit that housing policies favor boomers over youth? And that's a great question. I would say it would be accurate because the government's main priority is to stay in power. And of course, how do they do that? By protecting their voting base. They're pretty much trying to manipulate the real estate market and real estate prices. And we'll talk about that now in a second. But let's back up to earlier in the year when they first came out with that 30-year amortization announcement. This was again in the spring. I think it was in the budget or shortly after. And they announced 30-year amortizations for first-time buyers only on new homes. So they were kind of fairness for every generation theme, but at the same time, trying to stimulate home building. So that was their plan. It didn't work out too well because just last September or just last month in September, they came out and expanded on that. Now they have 30-year amortizations for insured mortgages for first-time buyers on all homes, and that's going to come into effect December 15th. And 30-year amortizations on new builds for all buyers. And that again is coming in December 15th. And let's not forget, they did increase the CMHC insured cap to 1.5 million from 1 million when most of the builders were calling for 1.25 million, and they went above and beyond that for some reason. So they went from singing the tune of fairness for every generation, increasing homes for first-time buyers or affordability for first-time buyers, to now it's protecting the home builders to create more supply. And it doesn't matter at what cost or how expensive the homes are. Their solution is let's just set it up so people can buy more expensive homes, and that's going to make home ownership more attainable. Now they've changed their wording. They use now attainable and affordability instead of affordable housing. So let's look at these definitions real quick and I'll show you what I mean. So quickly, just the definition for affordability: ability to be afforded, inexpensiveness. Now the affordable: inexpensive, reasonably priced. Attainable: to be able to be attained, achievable. Now, if you listen to the government's wordings, you'll hear that they've stopped using affordable and affordability, and they're starting to use attainable and unlocking home ownership and this kind of thing. So they're very crafty. Of course, they're professional politicians here, but they're very crafty at how they do this. And it's going to be at the first-time buyer's expense. The most recent policies favors existing homeowners and home builders and not first-time buyers or young families trying to enter the market. The reason homes aren't selling is because they are too expensive. They're not affordable, as per that definition: affordable, inexpensive, or reasonably priced. The government solution is actually the opposite of what's needed right now. They plan to make homes more expensive so that corporations and builders and existing homeowners profit while the first-time buyers and the young families are paying for all this. So don't fall for this trick. Be careful out there. If you're buying your first house, don't get into too much debt, and don't think that a 30-year mortgage is the end-all and be-all to get you into the housing market. With that being said, let's get into some housing charts here. Here's the first one. I just got an updated mortgage arrears in Canada. This is total mortgage arrears as a percent of total mortgages. It just ticked up as of July 2024. It's the last month we have. Of course, you don't report arrears until 60 to 90 days after. And yeah, they're up to 0.2% across Canada now. So we are seeing that rise. We've seen it consistently rise now for about a year. My next chart here is pretty interesting. It's the number of vacant new listings in two boards. The first board here in the green is ITSO, or the first system is ITSO. It's many boards, I think 12 boards involved in this right now. And you can see how much they've increased over the last 10 years. There's about 28,000 vacant homes that were newly listed in the first 3 quarters in this board alone, just in 2024. And moving on to the purple there on the right, this is the Toronto Real Estate Board vacant new listings. And there are like 10,000 vacant homes a month being listed right now, newly listed in this board. And there's about 75 to 76,000 homes just in 2024 in the first 3 quarters that have been vacant that are newly listed. So over 100,000 vacant homes just in these two boards or in these two systems that have been listed this year or newly listed. That's a lot of vacant homes. And of course, you can compare that to years ago, and it's almost double, or it is double in some instances. Next, I made this chart on the national housing prices here, the national average price. This doesn't have September yet. September won't be out till mid-month, but I just made this as a chart throughout the week, and I thought it was pretty interesting. You can see we have a perfect bearish pennant. I put this out there on X to see, what do you think? Where do you think it's going to break? Of course, when it's coming with the flagpole starting at the top coming down, it's got a continuation pattern. It's going to continue down. And we have almost a perfect pennant now. Now, it'll be interesting to see that September number is going to bounce back up a bit, and we will see it forming that perfect point of that pennant. This is like textbook statistical analysis for stocks here. I can't believe it. Looks like this pennant's going to fill in with the point pretty accurately here. And of course, it's probably going to break to the downside. Let's move across the country now to see how the major areas are doing, how their sales have been, how their prices are doing for the month of September. But first, I want to read some of the press releases from some of the major areas. Quebec, unfortunately, isn't included in this because it is a huge major area in Canada. Their statistics are out, but they actually didn't have any literature on that formal press release yet. Starting with the Greater Vancouver Realtors. Real estate watchers have been monitoring the data for signs of renewed strength in demand in response to recent mortgage rate reductions. But the September figures don't offer the signal that many are watching for. What is this, a stock market looking for signals here? Buy now, sell now. This is crazy how they talk about this. Sales continue trending roughly 25% below the 10-year seasonal average in the region, which, believe it or not, is a trend that has been in place for a few years now. With the September data, sales are now tracking slightly below our forecast. However, but we remain optimistic. We still end 2024 higher than 2023. Not seeming too upbeat there in the Vancouver Association of Realtors. Moving on to Fraser Valley. Not a huge board, but it was in here, and they had a press release readily available when I was doing the stats. So here it is. With 3 rate cuts already and more expected before the end of the year, buyers are watching the market closely to time their purchasing decisions. Whatever happened to don't time the market? Anyway, the current conditions should favor buyers, particularly in the detached market. However, until we start to see some movement in asking prices, properties will continue to sit on the market for extended periods as both buyers and sellers await the next rate announcement. Some wise words there. Until we see some movement in asking prices, meaning sellers, you need to lower your asking prices if you want to sell your homes, or they're going to sell in the market. Clearly stated in that press release. Next, on to the Calgary Real Estate Board. The most resilient real estate place in Canada, from what I hear. We are starting to see a rise in new listings in our market. However, most of the listing growth is occurring in the higher price ranges. While demand has stayed strong across all price ranges, the limited choice for lower-priced homes has likely prevented stronger sales in our market. While the challenges in the lower price ranges are not expected to change, improved supply combined with lower lending rates should keep demand strong throughout the fall, but without the extreme seller market conditions that contributed to the rapid price growth earlier this year. So far, it's pretty obvious that all these real estate boards unanimously think that rate cuts are going to be the saving grace for their lacking sales or their lower sales. But I guess we'll see. And here's a quick snapshot of Calgary. I'm using this one because I like the way they presented here. And of course, Calgary's the hot topic these days. So prices of the benchmark price, which I don't like, they don't have the average price in here, but I'll get into that later, up 5.5% from last year, from September last year. Sales are down 17.6% from last year. New listings up 15.5% from last year. Of course, they almost flipped there, so that's a big increase. Inventory overall up 50% over last year, which is insane. Months of inventory up 81% from last year. Wow, that's a big increase. And days on market up 9.5%. So it really looks like the market is changing in Calgary right now. And of course, I've said this before, they kind of lag behind Ontario and some other places. So this is not unexpected, especially if you've watched what I've had to say previously on this channel. Now, moving on to the Toronto Real Estate Board, the biggest real estate board in Canada by far. I am part of this board, so I agree with everything they have to say, and I have nothing bad to say about their press release. Anyway, let's get into it. As buyers take advantage of changes to mortgage lending guidelines and borrowing costs trend lower, home sales will steadily increase in relation to population growth. With every rate cut, a growing number of GTA households will afford a long-term investment in home ownership, including first-time buyers. By the way, these lending changes don't even come into effect until December 15th, so I don't know who's taking advantage of them right now. They go on to say, the annual improvement in September home sales was more than matched by the increase in new listings over the same period. This resulted in a better supplied market and increased negotiating power for buyers re-entering the market. The ability to negotiate on price led to moderate year-over-year price declines, particularly in the more affordable condo, apartment, and townhouse segments, which are popular with first-time buyers. So they kind of changed their tune in the lower paragraph. I know it was a statement from somebody else within the organization there, two different statements from two different people, I should say. But yeah, we went from, kind of, hey, are these new rules giving people more leverage to, well, we have more inventory now and less sales and the prices declined a little bit. And it's part of a theme we're seeing right across the country. Inventory is increasing steadily in most places. And I can't wait to see the national numbers next week for the months of inventory. I'm guessing we're going to be just higher than the last few years, from the highest point of the last few years, I should say. And that'll be interesting. I can't wait for those numbers to come out. All right, now let's get into some charts. We're going to start with the market balance, the sales to new listing ratio first this week, or this month, I should say, for September 2024. And you can see the majority of the places in here. Now, I don't have Newfoundland and the East Coast, Nova Scotia, New Brunswick in here. They didn't report. But anyway, let's get into the rest of the markets here. We have buyer's market. Look at all the areas, and these are all the major areas in the buyer's market. More than half of the areas reported this week. These are actually the lowest numbers I've ever seen when it comes to this statistic here. Now, Toronto is at 25% sales to new listings ratio, which is insane. It's the lowest in the country, the lowest I probably ever reported on here. And now they didn't have price declines. They had actually a price increase, which we'll get to in a second. But of course, I said this on a tweet this week. Do your research, know the market. When you're looking to buy a house, you should not only be looking or getting your agent to look at the recent sales and comparable sales based on square footage, based on location, whatever the case may be. You should also be looking at the market. What's the current sales to new listings ratio for that point in the month? You can bring it up. Any realtor can bring it up on their phone and they can check it. It's just one number divided by the other. Total number of sales divided by total number of new listings, and you'll get that. So you know exactly how balanced the market is. And of course, if it's in a buyer's market, negotiate on the house. Don't overpay. So I don't know if people are just creating hype here and people are getting excited and paying higher prices, but you shouldn't be, seeing that you guys are deep into a buyer's market. You should be negotiating the hell out of these properties. Anyway, let's move on. York region, Fraser Valley, Peel region. These are all big areas here in Canada. Northumberland Hills, okay, not so big. Greater Vancouver, 30% sales to new listings ratio. Like insane, right? They've clearly turned into a big time buyer's market. Halton region, which is like Oakville, Burlington, 30%. And of course, I think prices went up there too. And I've heard stories about multiple offers. Like, what are you doing out there? It's a buyer's market. Negotiate. Tell them you'll wait until next week to put the offer, whatever the case may be. Southern Georgian Bay, Kingston and area, Brantford, still under 40% here, still all buyer's markets. Berrien District, Hamilton, Burlington, still in a buyer's market, deep into a buyer's market, not just on the edge of it. Durham region, Windsor, Essex, Niagara region, where I'm from, 36%, Peterborough, 37%, Victoria, Big market out there, high price market, 37%, just into a buyer's market. London area, just in a buyer's market also. Waterloo region, Guelph, Simcoe district. Then balanced markets, we have Interior BC, Okanagan, Chilliwackton district, Ottawa, Grey Bruce, Owen Sound, Montreal, Lakelands, which is Muskoka area, Calgary, balanced market. They went quickly from a sellers or an overheated sellers to a sellers to a balanced market. It took only like 2, 3 months. Very quickly it moved there. Province of Quebec in a balanced market. Saskatchewan and Edmonton still in sellers markets. So again, there is that lag time with places like Edmonton and Saskatchewan. I kind of call those secondary markets, Calgary being the first. And of course, they lag behind. They, I'm sure, will be entering a balanced market very shortly. And here is the month over month price changes from August to September. Starting with the month over month price declines, we have Simcoe District minus 5% or so, Interior BC, Okanagan minus 4.3, Grey Bruce, Owen Sound minus 3.6, Fraser Valley minus 2.3, Kingston and area down just 2%, same with Durham region just under 2%. Windsor and Essex down 1.4%. Hamilton, Burlington down just over 1%. And just like to note, I did add in some horizontal lines to make it easier to read. I've had requests for that. I had to put these in manually because it doesn't do this on Google Sheets. So anyway, let's continue on here. Victoria down 0.5%. York down almost 0.5%. Peterborough pretty much even. Greater Vancouver up slightly, just like Peterborough, but pretty much even. London and area up just 1% or so. Edmonton 1%, just over 1%. Brantford just over 1%. Same with Calgary. Well, Calgary, sorry, 2%. Province of Quebec up 2.6% as a whole month over month. Waterloo region up 2.7%. Montreal up 2.8%. Niagara region, where I'm from, up 3.1%. Halton up 3.5%. Ottawa up 3.6%. Saskatchewan up 3.7%. Northumberland Hills up 4.8%. Berrien's District 5% up. Chilliwack 5.7%. Southern Georgian Bay up 6.2%. Toronto up 6.4%. We see a lot of volatility in places like Toronto, big swings up and down, just kind of like Bitcoin over there. Peel up 6.4%, Guelph up 9%, and the Lakelands, look at that, up 18%. A lot of rich people spending their money up there on these lakefront properties, I guess. I don't know what it is, but again, they have big swings because their prices could range from millions of dollars to, 800,000. So depending on who's buying what homes, but that is an indication that people with money are buying homes in Muskoka. I don't know if it's because they're taking advantage of price declines in the summer, but yeah, very interesting to see that dynamic there. As you can see, more places are up in September than not. Of course, that is a seasonal uptick, so don't get, again, caught off guard and think the market's taken off because of all these changes with the mortgage rules. They haven't even taken effect, as I mentioned previously, until December 15th. So yes, still lots of demand in certain parts of the market, but again, the sales to new listings ratio puts most of these places in buyer's market, so be careful out there. And on to the percent change from the peak. And yeah, the biggest loser there, Durham region, wow, down 27.8% still. And this is after September. Now, I'm guessing October they'll have an uptick in their prices because it usually works that way. Some months are up, some months are down. It's not too often we see months after months for 6 months of prices going down. But anyway, they're at 27.8%. Brantford down almost 27%. Peterborough down almost 27%. Northumberland Hills down 24%. London area down 23% from the peak. Same with Waterloo region, Grey Bruce, Owen Sound, and Kingston and area. Fraser Valley, Hamilton, Burlington, Windsor, Essex, and Berrien districts down 19% or so. Same with Peel region, Simcoe district, Southern Georgian Bay, and Niagara region, 18 to 19% there. Halton, York, Guelph, Chilliwack, and district, 16 to 18%. Victoria, Okanagan, Toronto, and Ottawa down, 14% in Victoria and 13.9, 14% Okanagan, Toronto and Ottawa down just around 10% or so. Greater Vancouver down 7% from their peak. Lakelands down 2.7%. Saskatchewan down 1.2%. Edmonton pretty much even for their all-time high, down a little bit. Calgary, same with them, only down 0.2% from their all-time highs. And then you got province of Quebec and Montreal up just under or just over 0.5% and almost 3% in Montreal. They have reached new highs in Montreal. I don't know what's going on there. Maybe they didn't get the Newsflash. Maybe we got to translate this to French or something. But yeah, they're making all-time highs there in September in the province of Quebec. Translating that into dollar figures. Durham region, you want to lose 350, $343,000, move to Durham region in 2022 and then sell in 2024, and you could be out a cool amount of $343,000. York region, 280,000. Halton down 277,000. Fraser Valley down 255,000. Peel region down 255,000. Wow, I'm still at $250,000 losses here and I'm still going. Brantford down 245,000. Brantford's a small place and they're losing huge money there. Peterborough, same with Peterborough, not a huge area. It's not small, but it's not huge. Down 236,000. Same with Waterloo region, down 236. Northumberland Hills down 215. Hamilton Burlington down 208. Southern Georgian Bay 208 also. Berrien District down 196. London area down 195. Grey Bruce Owen Sound down 184. Guelph down 179. Kingston and area down 163. Niagara region, my area, down $158,000. It's a lot of money for the people in Niagara. Down 155 in Simcoe. Victoria down 153. Chilliwack District down 150 grand. Windsor, Essex down 141. Toronto down 133. Interior BC, Okanagan down 104. Greater Vancouver down 94,000, which is pocket change for those people out there. Their places are like a million, 2 million just to get into the market out there. Ottawa down 72,000. Of course, their market's propped up by all the new public service. Government's growing, everything's growing over the last few years. So, of course, everyone needs a place in Ottawa. So, it's probably a good market to buy in, actually, until the government changes, that is. Down 29,000 in Muskoka Lakelands. That's pretty much even for them. That's not a lot for considering their price points. Saskatchewan, only $4,000 down from their peak. Edmonton, down $1,000, pretty much even. Same with Calgary, pretty much even, down $1,000. And then, of course, as I just mentioned, province of Quebec up 3,000 and Montreal up $17,000. Pretty insane there. That's all for this week. Drop me a comment, as always, down below. I love reading through them, and I'll see you next time.